Hi and welcome to the Market View for Tuesday the 22nd of April 2014. Returning back after the Easter weekend holiday, hope you had a good one. Starting off with the daily chart, we can see the market's currently finding support at the 76% here. What I mean by that is it's traded through and now is sitting back on top of it. And of course above that we've got the current high of 16821, and if you saw the previous market views, you know that we're heading towards the sort of 170 area from 2009, and then back from there to around 180 to the US dollar. So at the moment the market still long and moving higher. Yesterday the markets were open and traded high. You can see there they moved up around 50 points and then just turned around and came back as well. No signals and a very slow day there. This morning not much better. The market stuck in sideways range. We're struggling with the resistance area here. We've got this psychological one in the way at 168, and of course 168.21, which you can see was breached yesterday but on low volume, and then the market coming back. So the market's been up and had a look at this figure again yesterday and also on Thursday of last week, but failing to close above it at the moment. So keep this in mind. So the market sideways, struggling with the psychological 168 at the moment, which we can see here with the grey shaded area. In the news, we've got just one today, existing home sales at 3 p.m. from the US, and that's it. So it's very difficult to predict what the market will do this morning. It's all down to any news that will be released on a political or geopolitical basis, really. So not a lot to report. And a very brief market view. There's not a lot else that we can actually look at. Let's just draw a couple of I'll just remove this 62%. I'll just draw in a couple of lines for you for the downside should the market move lower. I'm going to this low here to this high first. This gives us the furthest point of where the market could come back to. Also, we could use this low here to this high here as well. This is what I call the sort of the rolling fib. So I'm just going to let me just delete the 62 for, so well, we'll delete all of it, shall we? And this low to this high, I can just get that to attach itself. Let's just try again. So this is where the market's more likely to come back to, with it being quiet at the moment. So the 167.48 would be the downside target, as long as the market can stay above the 76% and of course the 168 psychological level there. So this is more or less the range for today, and if this is breached, which would be useful, especially if we get a sell signal, then I would revert to this low to high that we saw a few moments ago as the next downside target. 166, well, actually 167 there. So that's more or less the range, the targets for today if the market does move lower. On the high side, of course, this area has got to be taken out, and the only other thing that we would have to look at is the 168.40 there, which of course would be putting in a new multi-year high there. So that's what I would be looking at should the market move higher. If it moves lower, the first stop to the downside is going to be the 62.76 here, which is off this low to this high, and then the recent low, which we see here, to the recent high would be the next area of support. Well, that's it. All things being equal, I will see you in tomorrow's market view. Let's hope the market starts to look a bit lively. It's been very quiet for the last few days, as you would expect during the Easter period. Have a great day. I will see you then. As ever, thanks you for your support and also for watching.